Good evening, I'm Giuseppe Basile, I'm the analyst and trading mentor you can find at the website www.vipstalker.com. I also post regularly on Twitter using the Vipstalker nickname. Good evening, today is Tuesday, April the 15th, 2014, and in this video I'm going to review for you the Japanese majors, the US dollar versus Japanese yen, the euro versus Japanese yen, and pound versus Japanese yen. This is a daily update which complements the weekly newsletter that I send for free to my subscribers, and this is valid for tomorrow, April the 16th. Those who follow me know that I identified this level of support, the 101.50, and this was identified actually after these highs were printed. The explanation of this draw is in the weekly newsletter. If you subscribe for it, you receive the previous 6 numbers of it, and you can review how on the weekly time frame we come with this trace well in advance, almost 1 month in advance, before it was first retested at the beginning of February. As you can see, it was tested once, 2 times, 3, 4, 5 times now, and it was possible to time the sequence of measure move lower and confirm support at 101.50, looking at and using the sequence of measure move short here, and looking at the fib stalking technique. If you want to know more about it, I'm going to present in April the 22nd, I'm going to present a webinar on FX Street. So if you are interested, you can actually register for free, and certainly something interesting and a fresh view on market timing. So going back to then to this market review, I want to start from the US dollar versus Japanese yen, and those who follow me know that I've been looking at this trade now. This trade long now since a few days, and we identified the sequence of measure move lower and the anchor where this sequence was actually traced. And I'm going to show you on the 4-hour chart that right today we had the violation of this 102.07 level. Now, how we get to this level, I showed you in the previous in the last few days. There was a level of an anchor that was used here and actually was respected, and I showed you this now April the 8th here, April the 9th, and actually this area of resistance starting at 102.04 was able to bring price into 101.30 here, just the first target. And then I've been starting looking at the next measure move in the sequence, same anchor, new lows. These are the rules that I follow to model program trading here, and so we knew this level now with 4 days in advance here, and 102.07 or 208 here was pierced on the upside, confirming the support at the level that I showed you on the daily time frame. The same level that was now tested is now tested 5 times. So this would have been a potential entry, 102.06, with stops below 101.30 here, and now the potential to move into the first target, and the first target of this measure move is going to be above high here if we actually continue higher. Continuation higher will mean here that the Japanese yen it's weaker than the US dollar if the US dollar continues lower, and actually I made a review of the dollar index in one of the videos of tonight, so you can review that video and see what I anticipate for the dollar index. But if this area of support 101.52 that we are now following since the beginning of the year, basically, so 3 months and a half, continues and gets into the first target, that first target would be a 107.28. So keep that in mind. That level of target in reality has been already confirmed when we saw price moving above this 103.65 the first time here. Eventually moved above the level again, and again we are seeing 101.50 acting as support. So where we're going to look for this market to move to. So if you took a long here as a consequence of this breakout 102.07 or any other reason, there is a good probability for this trade to work with a stop below lows here, and the next area of resistance is going to be that of 102.72. Reviewing the market on the 15 minutes, not really meaningful. We can do that, but clearly the levels are the same that come from the 4-hour chart. So as you can see here, first target 101.26, 101.31, so 50 pips of front run, and for me that's enough to consider this level hit. So the next sequence, the next measure move in the sequence is from these lows to lows, and as you can see, it was broken. It was broken actually yesterday. There's the new open here, but the level was broken. So this is a long. This market is a long. That's the direction where we should be trading this market. So there's no need and no reason for shorting this market at this stage. Moving to the euro versus the Japanese yen, the situation is very, very similar here. And again, as I suggested yesterday, there would be the possibility for this market to retest the 140. It didn't get that level, but the actual trade was when 140 was actually the sequence of measure move lower here, failed the first time when price approached 140, and that was the entry opportunity for this market, and not now, with a stop below lows, and I also mentioned previous lows for a safer stop here. So again, this market is moving higher. Its first target is 145.58. It retested now two times, I would say, this 140, and the daily time frame was not as clean as the 4-hour time frame was not as clean as the previous case, and the reason is that once we got the violation of shorts here, the longs initially did not work, as we can see here, because we saw a violation of the 140.64, so longs were not able to support this price. However, shorts on the larger time frame, on the daily time frame, 140.177, never came into play, and so whenever this the sequence that I'm going to show you on the 15 minutes failed, this market actually started moving up again, and we can trace a sequence here from highs on the 11th here to lows, and we had this 140.85 bringing prices right into that first target, and that's not a case that's very common, and the reason for this is that there is a huge participation of program trading and algorithmic trading on these markets, and they respect certain levels very, very closely. So as soon as we broke 140.64, this could have been a potential entry with a stop below previous lows here, and again 140.177 is going to be for this market a level of resistance. Let's see the sequence of measure move on the 15 minutes here. We had this gap down today, and the market anyway was able to respected this 140.85 and then we saw price into this 141.21. The next measure move in the sequence failed, and this was for us an indication that this market found support again. Moving to the pound versus Japanese yen, again starting from the daily here. The situation is slightly different here because we wanted, and I wanted to see this market to retest 168.74, and this is a level now that has been tested once and twice. It's not a level actually, but it's an actual area of support here. And if I change the scale, I can show you how we trace this area from lows to highs. And price never got below the 61.8% level there, 167.54, and price continue higher and actually confirmed the target that I showed you before. This target are at 175.86 here. And so at this stage I was excuse me, I was looking for a retest of this area starting at 168.70. That didn't happen, and here we had a clear first measure move short. We never broke price into 169.83. The next measure move, although it's not yet valid, it's not valid, did not hold here. But this is not the kind, did not hold. This is not the kind of move I'm looking at now. What I will be looking at is an actual break of the 170-175, and when that happens, then we will have confirmation that this is a consolidation on top of 168.70, which is still a good confirmation that the market is going to continue higher, and maybe it will provide another opportunity to enter long. When we study the 4-hour chart, the sequence, there is a sequence here which we can see, which is an inner sequence from these highs to lows. I will remove the previous measure move here, and as you can see, this broke price into 169.58. The next measure move short would have been from highs to lows, and this would have been a little bit risky, and the reason for that is that support did not trade. We did not see price get into that area of support that supported price previously, so it was very difficult trade to take here. But basically this market is behaving like the other Japanese pairs, and there is a possibility that will continue higher and maybe then continue this consolidation, and then it eventually broke out probably, because this consolidation is coming on top of a level of support on the daily, and on top of level a weekly support level here. So this market is clearly pointing higher, and it has been trading into areas of support here which held so far. So it's possible for this market to just continue higher. Now whether we will see a consolidation here, I usually don't look at consolidation like this with trend lines. I don't use trend lines, but just for you to visualize this. So we will only have a confirmation. So basically, if we look at this price, we already have a confirmation of lateral move, because shorts were not able to hold price here. 170.68 and 171.36-37 broke on the upside, and at the same time, soon after that, bulls were not able to support price here, because we saw the break just last week. So actually there is already a confirmation here for a lateral move. So the market might break out from here, or just retest and maybe give another nice opportunity. And if we believe that longs are preferred here, the market could come again at some point into this 170.43, and this would be the entry. Of course, anything can happen, the market can just continue higher. I hope this is useful. Thank you very much for sticking around and watching this video. I wish you a very good evening and a great trading week day tomorrow. Bye bye now.